Yo, 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 what is up, guys? Welcome back to another Thompson's Two Cents. I'm your host, Larry Thompson, coming to you on this cold Friday. Dude, it's been too cold recently. I don't know what's going on with this weather. I'm ready to move to Puerto Rico. I'm in South Carolina, and we're about to get snow for the second weekend in a row. Not about this life. For you guys up north, I feel sorry for you. I assume you guys are getting slammed too. But today is one of my favorite shows we do. It's the All Gas No Breaks, episode 7, 20 charts in 20 minutes. But today, guys, I probably have like 25 charts, maybe 30 charts. So we're going to rip through it. Gene's going to get the countdown started, and let's rock. All right, so starting here, general overview, S&P 500. As you guys know, we'll just zoom out for a second. See that we're in one of these sustained uptrend phases, which at this point is kind of just treading sideways. The market's kind of been really annoying. There's been dispersion underneath the surface. That's kind of caused a sideways price action. And underneath the surface, you can see S&P members above their 200-day. We're really kind of stalling out, right? We had this peekaboo a couple weeks ago, and then we're kind of just stalling the past couple of weeks. We did eke out a green week in the market, but underneath the hood, the price action, to me, is a little cautious. I think I wrote a post yesterday kind of about how I'm analyzing the markets. And one of the big things is you can do the work, but the work is only part of it. You then have to listen to the message of the market. So that's what these charts are going to do. Kind of show the message that I'm currently seeing really over the past month and past couple of weeks. So ugly chart here, but I just wanted to start with a basic overview of the S&P 500 sectors. And what I did here is this is the 1 month return. So this is the return for January. And so at the top, what do we have? Energy, materials, consumer staples. At the bottom, what do we have? Financials, technology, discretionary, and healthcare. So if you think about this month and the sideways price action, underneath the surface, this price action is not bullish for the market. This is not characteristic of expansion, characteristic of early stage, characteristic of really breaking out. This is more of a characteristic of a market that might be seeing some potential worries, right? So energy leading, materials leading, consumer staples, I would consider those in general to be a little bit more defensive, not what I like to see as a whole. So this is something for me. I want to see change, but it's also just, I'm listening to the market. It's a reason for me to maybe exercise a little bit of caution as we start to dig through the charts. So talking high level here, I don't love what I'm seeing. And then next thing I wanted to break down is my classic chart that we have here of the breadth data that I look at. And so I'm not going to explain it here today, but basically the 4 quadrants that we have, where are we seeing strength? We're seeing strength in the bottom right quadrant. And this is kind of the risk off, right? Risk off to a degree, especially for the market cap weighted part of the index. We're kind of seeing risk off behavior here, right? Percent above 100-day and 200-day are really thriving in this bottom right. Very short-term weakness. There's a lot of short-term weakness in discretionary tech and even financials. And we're seeing strength in areas of the market that I wouldn't consider to be, 1, offensive, and 2, make up the majority of the market. These are areas of the market that make up 2, 3, 4% of the S&P 500. So underneath the surface, breadth is okay, but we're seeing leadership from areas of the market I don't love to see. So I'm just seeing confirmation of this in different ways. This is the week over week change. As you can see, some weakness in the short term areas of offense. Also over here, 100-day, 200-day. We saw some improvements for comm services. We saw some stocks get back above their 100-day moving average, but overall kind of a mixed picture. Once again, seeing that rotation into areas of the market that aren't explicitly bullish heading into February during a midterm election year. So I hate looking at charts and the message of the market being, give it some time, be patient. Yes, you can have some positioning in energy and materials, but overall, I don't necessarily love those areas of the market. Let me know in the chat what areas of the market you guys are looking at, because right now I'm just kind of seeing mixed signals. Then let's look at it month over month. So this is from January 2nd, right? Weekend January 2nd to January 30th. So month over month change essentially for the month. What do we see? Similar to what we mentioned at the beginning of the show, we see This bottom right quadrant really thriving. A lot of improvement in late stage areas of the market, and not a lot of improvement in offensive areas of the market. So this to me, once again, reason to be cautious. Look at this short-term 5, 10, 20 day, month over month. A lot of contraction taking place underneath the surface. So seeing this contraction underneath the surface, and we'll kind of get into those individual charts. The message right now is, hey, it's a little mixed. So I see someone said they're watching energy and financials, good areas of the market. I think there's some pullbacks within international. So yeah, let's kind of keep rocking here. So this is a chart from the Daily Number, but with Grant Hawkridge. Shout out to Grant, the Aussie. And so I just wanted to talk about kind of the S&P 500 cycle composite for 2026. So it's a midterm election year, right? Years ending in 6, and then every year between 1950 and 2025. So this is Grant's chart. Shout out to the Daily Number. If you aren't subscribed, I would subscribe. But you can see to start the year tends to be a little bit choppy. And so we're headed into February, which tend to be a good year in this cycle composite. But in general, we have this choppiness in a midterm election year, right? You're seeing it politically and geopolitically. I won't get too far into that today, but don't be surprised in a midterm election year when the media makes it seem like the world is ending. That is literally their job, right? So the media thrives in midterm election years, and volatility thrives in midterm election years. So let's just see if price action aligns. And right now it kind of aligns with some of the choppiness underneath the surface. All right, last chart here that's kind of a general overview, and then we'll get into the individuals. Look at percent above the 20-day moving averages for the S&P 500, 400, and 600. I will just caveat here, I see people mentioning international. International looks great, but how much exposure are you going to have to international? Are you going to be 100% international, right? The reality is you're probably mainly positioned in the United States, in the S&P 500. Great if you're overweight international, but how overweight are you going to go? Are you going to have 90% of your portfolio in international? I don't know, right? I don't. So I kind of focus on the S&P 1500. I focus on US the majority of the time. I do get some international exposure, just not the majority of my portfolio. So here, once again, percent above 20-day, they're kind of middling. All are kind of around 50%, a little bit below. And so I don't love the look here. I think it's kind of just mixed. I'm not shorting stocks here, but I'm also not seeing a ton of great entries long. So overall, just a mixed picture from the market. And I think a lot of that has to do with the mags, right? So let's talk about that, right? So Mag 7 represent 33% of the S&P 500. We see here just a sideways, some may call it a distribution pattern, some may just call it a consolidation. Underneath the surface, long-term, right, we're above key moving averages and key long-term AVWAPs. But short-term, we're just middling sideways with the 50-day and the all-time high AVWAP. So you kind of have this no man's land of all-time high AVWAP, 50-day, but above the 200-day and, those pivot lows AVWAP. That area in the middle, it's not where trend following thrives, right? Meddling sideways is not where trend following thrives. So maybe you look a little bit more mean reversion trades, right? You look for things that are kind of bottoming, might have a top side, but just buying here in the middle of a range is not a style of trading that I like. And it's why you're seeing a lot of meddling in the market overall. And MAGS is just examples of that. So if we take the data we've showed, right, think about the market's kind of a little bit messy, a little bit choppy, a little bit sideways. What are some trades we might want to look at? So we might want to look at stocks that are right bottoming, right, and have well-defined risk reward. One of them is Apple. Apple here, to me, this is a oops pattern. You have this failed breakdown in Apple, and then you're kind of finding support here around 250. It's at 259 today. I added exposure to Apple right before the close. I think you're seeing a tape that might be leaning defensive, and Apple tends to do well in defensive markets, better than tech overall, right? So I think Apple is a trade here that I put on. It's a chart that I think isn't beautiful, right? But you're sitting at the lower bounds. You've kind of washed off these oversold conditions. And so let's see if we have some upside in something like Apple. Microsoft, right? This is another one that is stinky. It's a little stinky. It's a little bit of bottom picking. I haven't put this trade on yet, but it's one I'll be looking at next week for follow through. I think the story and narrative around Apple right now is about as bad as it's ever been. One of the largest right? Single day drawdowns yesterday in its history as a stock. But what have we seen? We saw momentum not make new lows. So we saw an RSI divergence here in Microsoft. We're below the 200 day, but big snapback rallies tend to occur below the 200 day. So in something like Apple here, right? Microsoft, I might use 425 level as my risk reward, might use yesterday's lows as my risk reward. I might hold my nose and swing at something like this because I'm not buying breakouts right now. Breakouts aren't working. We'll kind of go through that in a minute, but breakouts aren't working. So I might be buying some more of these mean reversion trades in something like Microsoft here. And if it fails, right, we're only risking $5. Tesla, another area of the market, right, just chopping sideways. This is a zoomed out chart. Yes, beautiful base breakup, but nothing's occurred in Tesla, right? It's just chopping sideways. So if we just continue to see this chop sideways, I don't see a reason to have a ton of conviction. The market isn't saying be overly bullish right now. It's just giving us these meh, it's just like meh, right? It's unfortunately January and the weather sucks, so I'm not going to go to the beach, right? Maybe I'll take a trip to St. Lucia. Shout out St. Lucia. Oh, the weather there is perfect. All right, I got to get back to this because I'll just be dreaming about St. Lucia the rest of the time. But Tesla, all right, just chopping sideways here. I don't see a trade in Tesla. Everyone loves to talk about it, the news, blah, blah, blah. Who cares? Just sideways, messy. Amazon, right? So another underneath the surface trade, right? Tactical trade I might be looking at is against this all-time high AVWAP. Nice base on base. I've swung the bat at this before. It's been messy. And so I position size accordingly. It's like a messy looking chart. It's really just chopping sideways, failing to really resume this uptrend. Just messy, right? Same price since the beginning of 2025. It's gone nowhere for an entire year. So I think if you do want to take these trades, you just have to run some AVWAPs. You have to have some tight risk reward scenarios. And I'm looking at what? Going long probably against 240 with a stop around 234, something like Amazon. I think if we're gonna rally, we need the mags to get back on the side, get back on offense. And so I'm willing to maybe risk some capital here in these names. I don't love it. It's not high conviction. So position size is going to be accordingly. But Amazon, another chart that is kind of setting up. And then the next thing I kind of wanted to talk about was getting more into some of these sectors. And so I wanted to break down some sectors and break down some stories here. I see John. What's up, John? I see John mentioned he's watching energy. Yeah, I mean, energy's breaking out, and I don't know anyone who doesn't know that energy's breaking out. I could probably call my dog Frank in here right now, and he could tell me the energy chart looks good. The problem is a lot of charts that have looked good have failed to break out, right? They've broken out. Look at financials. Look at healthcare. Look at equal weight retail, which we'll get to those in a minute. But so I'm curious here. Is this where you're adding exposure to energy, or do you wait for the pullback? So this is energy versus S&P 500. As you can see, RSI in the top. We've kind of gotten stuck at 60. We've gotten stuck at 60, which is common in downtrends. But so you've seen this before. We've seen it 3 times before. Is this time different? I don't know. So I'm not adding energy right here like everyone else. I'm gonna wait. I have some exposure. I have a half position on in energy, and ExxonMobil looks great. Other names look great within it, but I'm just not convinced. I'm not convinced because what we've seen in other areas of the market and the strong rally that it's already had, and the fact that, like I said, my dog Frank knows that energy's doing well right now. I talked about failed breakouts, sideways messy price action. We're seeing that in healthcare. Right, healthcare looked great. I know everyone was long when it was breaking out. Now no one's long, right? It's funny how that works in the market. Intellectual honesty is not a thing when it comes to finance and when it comes to Twitter. No one has intellectual honesty. I'm the only one that's not a billionaire on Twitter. So hand up, I got long healthcare and it failed to break out. And so now we're below this recent high AVWAP, and it's just meddling sideways. I think pharmaceuticals look great, but I think healthcare is kind of just trading sideways here. We've seen the health insurance names kind of get hit. It's a midterm year, so we see a little bit more volatility from the presidents, from political action. You've seen 3 or 4 political things come out in the past month. You've seen the ICE news kind of grow. And so you've just seen this, even if it's manufactured distress, you've seen more volatility underneath the surface. S&P 500 is compressed sideways. Underneath the surface, you've seen the volatility. Financials, right? Another area of the market, right? Risk on area of the market. We want to see financials doing well. I know John mentioned it. So if financials are going to pick up the slack, they need to do it here, right? They need to do it against this 200 day, right? They're just meddling sideways below this failed breakout level. I don't like to see failed breakouts. Once again, an area of the market, everyone was long when it broke out. But now no one's long financials, right? No one's long financials anymore. Everyone sold the failed breakout, and so I see a lot of this underneath the surface where it's just messy price action, which, right, I'm just relaying a message, right? If you want someone who runs new all-time high scans and tells you everything's perfect and rainbowy, that's just not me. I see some sideways messy action. Still above the 200 day. Maybe we find support here. So maybe you do hold your nose, right? If you think February is going to be the month we continue to rally, maybe you do hold your nose here and buy the breakout. I might just wait for more confirmation and something from financials, but we're still above the 200 day. So it's not like I'm underweight equities as a whole. I'm just not adding any new positions right this moment. Energy, right? Mentioned it a couple slides back, right? So kind of pair this slide with this slide. Okay, so beautiful breakout. Love it. Love to see a beautiful breakout. RSI is 76. So we're overbought here short term. Overbought is a good thing when it comes to trend following your breakouts. You want to see confirmation. But you take this chart that's overbought and you couple it with, right, maybe this is where we take a breather. You couple it with the fact that we have a lot of failed breakouts underneath the surface in the market. And then I'll one-up you even more. Couple it with the fact that materials basically did the same thing a couple days ago and is now pulling back. So we kind of have this intermarket relationship. We have the broad market relationship that's saying, hey, this probably just isn't going to go up in a straight line. You saw metals and precious metals and things pull back today. I think you saw a new Fed chair kind of get elected today. And so I might just be waiting for energy to pull it in a little bit. And I would be a buyer, right? I would be a buyer here if we kind of get a pullback in energy. I think you would have really clean risk reward. I think here you still have pretty clean risk reward, but I know everyone is long energy, right? So let's see in a couple weeks if everyone's long energy, if this breakout fails. But we're seeing a lot of failed breakouts underneath the surface. I think this is another area of the market where I'm just a little more cautious due to the rotation that we've seen and kind of failed breakouts we've seen. Materials. I think materials might be an area I'm looking to stab at. We've seen this kind of defensive, late stage areas of the market working. Materials might be an area, right? If you're not adding to energy right now, materials might be an area where you might want to add some exposure. But it is still RSI 60. I think this is a strong uptrend. Maybe we see some follow through. John says, sounds like it's a good point to raise some cash and wait for a better entry point. I would say yes. I think there's evidence that are suggesting such. Maybe you buy individual names right within energy that look good, but I think overall we're seeing some kind of dispersion. Consumer discretionary, right? Similar base breakout, and then we've just middled sideways. Amazon, like I said, Amazon has to get going. Tesla has to get going. The two biggest names in this area for this to resolve. So we're really at these critical junctures where you don't place big bets when it's 50-50, right? You do have pretty clean risk reward, but we haven't seen any follow through, and we haven't seen risk ratios really improve at all. So it's not a time where I'm just taking a ton of risk. So I do like consumer discretionary as a whole above 120, but this could be a topping pattern in something like consumer discretionary, still above the 200 day. So just continue to watch these areas of the market. Comm services breaking out, right? One of the areas that is breaking out, and you're seeing it mainly driven by Google, right? Google's the largest holding here. So Google continues to look great, continues to look unlike a lot of the Mag 7, and comm services is being rewarded as a result. So if you are a breakout buyer and you just buy them hand over fist, no matter what's kind of occurring intermarketly, right? Comm services might be an area you're looking. But I kind of look under the hood, only 48% of comm services are above their 200-day moving average. So less than half the stocks are supporting this breakout. So it's really a Google thing. It's not a comm services overall thing. Industrials, right? This is kind of an area, right? Nice consolidation, right? If you're looking for good entries, right? This consolidation breaking higher, I think, would give you a good entry in something like industrials. Industrials continue to look good, continue to have support underneath the surface. 70% are above their 200-day, 70% are above their 50-day, right? Short-term kind of pullback here in industrials over the past couple of days. You've seen the consolidation, but industrials is an area I'm watching, see if we can see that resolution higher here. And then kind of want to get into some industry specific groups. This to me is the most bizarre thing in the market. I think outside of the precious metals, I think what we're seeing in software is crazy, especially with the market holding up so well. You normally don't see software break down like this and the market trade sideways. And that's because of semiconductors. So semiconductors make up the majority of tech, and then the second largest is software. So tech can kind of go sideways if semis are doing really, really well, which they have been. But this failed breakout and then breakdown, failed breakout, then breakdown, has just been textbook. You see momentum dry up. So I think we are due for some mean reversion in software. I talked about CrowdStrike this past week. I'm still long CrowdStrike. That's kind of, I'm using some mean reversion setups to counter a lot of my trend following that's failing to break out. So those kind of complement each other. And so I'm watching software here because I would love to see software kind of regain its footing and just see some mean reversion, maybe back to 100. And maybe we short it again, but I think overall just software has to be something on your radar. Microsoft having that huge down day, names underneath the surface just are kind of struggling. It's just not things you typically see in a healthy bull market. I forgot to reorganize these, but healthcare, the one area in healthcare that's doing really, really well is pharmaceuticals, right? So still long pharmaceuticals. This uptrend is intact. So there's just more areas to pick your spots when you look underneath the surface. There is long-term support in healthcare. It's more short-term that it's kind of struggling, right? So 40% of healthcare names are above their 20-day, but 70 are above their 200-day. So if you are kind of that buy the dip, might not necessarily be in pharmaceuticals, but we're seeing some strength underneath the surface in something like pharmaceuticals and biotechs, right? Because health insurers are kind of what's getting hit. And then banks, right? We talked a little bit about failed breakout in financials. Banks are trading sideways here, right? RSI is at 54, right in the middle. Price sitting right above support, kind of failing to really get going. So we need some type of catalyst for these to resolve higher. You do have that clean risk reward, but I don't know if due to what's occurring underneath the surface, I'm swinging the bat. But I'm watching these names. That's why it's in the all gas, no brakes chart list. And then this one is another one that's just kind of annoying, right? Failed breakout in S&P 500 retail. So 90 equally weighted retail names. RSI is around 40 right now. So if we can stick it here around 85 and we see some of these mean reversions, these are where those mean reversion trades come in. So you have this well-defined level down here and maybe, right, you hold your nose, you buy against 85, right? We're at 86.50 and you think we kind of see that upside resolution. Because if it is a bull market, these things aren't going to keep going down, right? I know that's tautology or whatever you want to call it. It's like, duh, very obvious. But I think it's just the truth. Like if the bull market's going to continue, we're not going to see software continue to go down. We're not going to see failed breakouts continue. We're not going to see retail, make new 3-month lows. So just something to keep in mind as we kind of continue to look underneath the surface. And now I just want to go into a couple individual charts and just see the price characteristic changes that have occurred. So ARC, right? Risk on area of the market. We've kind of seen this head and shoulders. We've seen this sideways price action. And you've seen, look at RSI in the top panel. So look at RSI since the April lows here. So we got above 50. And then you see for the majority of this time, right, RSI 50 served as support. We got overbought, then failed to break out. This was like a failed breakout. Now RSI got below 50, tested 30, right, got a little oversold, and now we're just middling below 60. This is distribution, right? This is sideways, losing momentum, distribution type pattern. So, right, maybe this 200 days serves as support, right? If you're a mean reversion, maybe we see some mean reversion. But this is a change in price characteristic for risk on assets to some degree, right? I know there's other areas of risk on assets that are doing well, But ARK is one of those names that people watch. SoFi, right? This is a changing characteristic. SoFi has been a darling in this bull market, and we're seeing it break down, right? Break below 25. Failed breakouts don't tend to add up like they are right now in bull markets. And so just another name that, right, I was hoping this would resolve higher. I was waiting for some resolution higher, but now I'm out of it, right? Broke below 25. You got to get out of something like this. Palantir. Palantir trading sideways, another market darling that this is distribution. RSI is around 52. This is the lowest RSI we've seen in years. So you've seen this distribution in Palantir. You've seen this distribution in SoFi. We're seeing distribution in something like Robinhood, another market darling. It's not the time that I'm gung-ho making fun of bears. It's just a time where I'm okay not pressing the gas, right? All gas, no brakes. But the market is saying, hey, just slow down a little bit. Just slow down, wait for some resolution, maybe do some bottom fishing with well-defined risk reward, well-defined tight stops. But overall, I don't see a reason here to be pressing the gas in this like tactical time frame. Still long-term uptrend, but I think these tactical time frames we're just kind of seeing price action chop sideways. And so that all supports this beginning thesis, which we're seeing is just kind of a chop sideways. So that's what I had today for the homies. I do appreciate you guys. If you guys could drop a like and a comment, I would appreciate it. It really does help the channel. It helps me. It helps me know what you guys want. And also just let me know what other type of content you guys want. Do you want me to do more educational posts? Do you want me to do more deep dives on just one individual sector? Like I can go through software and just break down that entire sector. I can go through semis and do a whole semis deep dive. I can do those on the week. I'm going to continue to do all gas, no breaks. I think everyone likes the 20 charts in 20 minutes. But if you guys could let me know in the comments. Also, if you ask any questions in the comments, I always respond to those. So I appreciate the love. I hope you guys stay warm this weekend. It's cold here. And much love. Peace.